This episode is for highly skilled specialists who would like to get involved with the startup space as an advisor or consultant, and also to tap into a unique investing role you might have never heard of before in a VC fund. You're someone who truly loves the environment and making an impact in the world to improve our society for good. And now you are an impact investing researcher at Harvard, impact consultant at Bright Edge, and advisor at Serac Ventures. Jonah, welcome to the podcast.
Thanks, Joe. Thanks for having me.
Let's go back to the start of your journey. What was your first real exposure to venture capital? Was it when you were a research analyst at Cornell?
Yeah, to be honest, no, not at Cornell. I think growing up in Northern California, a lot of the really impressive people I knew were really interested in entrepreneurship. Everyone wanted to go to Stanford or Berkeley, move to the Valley and build something on their own. So I think the world of VC and sort of startup land was always kind of in my backyard, being from Sacramento, but not something I really experienced firsthand till I moved to Boston. So when I worked at Cornell during graduate school, actually remote, that was actually my first exposure to economics and studying management practices. And I was working with a strategy professor at Cornell. But ultimately, once I got to HBS, I realized, okay, there's this entire world that I don't understand very well. And within my full-time research role, it was understanding not only impact investing, but its connectivity to venture capital and how people allocate to certain investment opportunities with a dual mandate to make a lot of money through startups that will eventually exit, and also creating social and environmental returns. So that was kind of my first break point into VC specifically and trying to understand that space.
Yeah, and you really got into what VC is by just like trying to understand about the world, trying to make an impact and doing really, really deep research. Could you talk about from this point on at the start of your journey all the way to right now, after you've gone through like a bunch of VC roles?
Yeah, of course. Yeah. So started my career straight out of undergrad, went back to graduate school. I was actually considering being a professor. So that's why I knew I wanted to go to graduate school. So finished up undergrad at Westmont College in California. I moved to London, where I went to the London School of Economics and did my master's, mostly studying politics and economics. And at that point, I thought, okay, do I jump off and do a PhD or go into industry? And at that point, I had a really great opportunity to join Goldman Sachs in the UK, doing contracted market research projects. So I did that for 2 years, which was a great exposure to financial services and investment banking, and just understanding really how the world of finance and business works. It was an amazing trial by fire. At that point, was still thinking at the end of those 2 years, do I want to do this forever or still explore academia? So I was looking at different research or pre-doctoral roles back in the States. And that's how I landed this role at Harvard, where I've been for over 2 years. So during this time, I've gotten to work with several VC funds, sort of applying my research and being just an advisor to a lot of different funds. So I've worked at Global Millennial Capital as a venture partner and an investor. I currently consult Bright Edge, which is the impact VC arm of the American Cancer Society, and I'm happy to chat about them. They have an incredible team. And as well, working with other funds like Serac Ventures, which is based in OKC, and a few others. So it's really been a journey of having one foot in academia and one foot sort of connecting with the industry and really having a pulse on what's going on.
Yeah, and it really sounds like you really went deep into your research. Like you were a researcher at your core, and then these VC funds, some of them is mostly generalists, and they might not even go even that much in depth. And that's where specialists like yourself comes in, and you advise them and be like, okay, so I've got this point of view, and what do you think about that? And then the VC funds is they actually support your views and they really take it into consideration because of your expertise. So could you talk about what exactly does a consultant at Bright Edge do or an advisor at Serac Ventures do?
Yeah, good question. And maybe I'll take a step back because I love what you said about having a point of view. So really, I think it's taking the value that you can give to these firms through your unique expertise. So again, if you're an academic, if you're a faculty or researcher, you really deep dive on a particular subject. So like, for example, recently, a lot of funds have hired venture fellows to really advise on their AI investments. Because if you're a PhD who's been working on AI before it was cool, about 5 years ago, then you really want to gain that expertise. Like, okay, how do I understand foundational models? What kind of investments are actually interesting and not just hot right now because the market's interested in them? And it's really understanding the core problems or using even first principles to understand, okay, what kind of deals do I really want to look for? And what what sort of innovations look good in a PowerPoint, but I really want to avoid. And I think deep experts or academics are a great way to kind of advise on those investments. So more specifically at Bright Edge, it's an amazing team of deep experts. Almost everyone on the investment team has a PhD. For example, American Cancer Society is an amazing organization focusing on eradicating cancer as we know it for everyone. So incredible mission alignment already. My expertise more in impact measurement and management, again, coming from HBS, focusing on impact investing, can then advise on when we think about our investment approach, how are we actually measuring and tracking our investments? So that's really where I come in. And Bright Edge already does a lot of things very, very well. So I'm just partnering with them on their journey in a different role. So what Ciroc has done is create a guild, and several VC funds will have a guild or a board or just an advisory network. And really, these are people that bring a very unique skill set that can support portfolio companies, so existing portfolio companies or potential investees. So at Ciroc, for example, and several other firms do this, they'll really tap their network to evaluate different deals. So I mentioned, potentially an AI PhD, for example. If you're evaluating AI or ML investments, you would maybe tap your PhD friend to say, hey, look, can you take a look at this pitch deck, or here are the financials for this company? Does this actually make sense? Does this valuation make sense? And they can really give you their expert opinion that you can trust instead of you having a deep dive in every new sector you're interested in. So I think that's really that's really the value of an advisor or a consultant, is bring your unique value proposition and applying it to these different funds that, frankly, GPs don't have time to do everything. It's an incredibly demanding job. So if you can outsource or bring in other experts, I think that just makes you much more capable.
Yeah, and it really shows that they actually care about which companies and their entire process of doing things. Because, it's like if you have an entire team of PhDs at Great Edge, it's like, oh my gosh, they've got all these people who are actually experts, people who knows the domain really, really well. And then even in like other areas where it's like they want you to track like impact investing, they still want to have an expert doing it. So every single part of their VC fund, Bright Edge is the VC arm of the cancer research. So it's like every single part they want an expert to do it, and that really just shows like how amazing this entire process is, how amazing the experts really contribute to this. Could you talk about maybe, do you think master students or PhD students, you should kind of just like hire a PhD researcher or someone who has done research for a long time as a consultant or even as a job? What are your thoughts on that for VC?
Yeah, really good question. I'm going to say it depends is the easy answer. And I'll say it depends if you are a deep tech a VC fund. So, for example, take the oncology example because it applies to Bright Edge. If you have actually done scientific research in a lab for several years at a prominent university, you have probably gone on to do your PhD. Although I do know a great VC who has his master's, but he worked in a lab, didn't do the PhD, still a great resource for his deep tech field. That is a very different thing than, yeah, I guess being a generalist and then focusing on one thematic approach. So AI is pretty cross-cutting, but there's a lot of specificity within that you could dive into. So to me, it's less about the degree itself, but if it's, you require lab experience and, you have to be a scientist to then understand the investments you're making, whether it's cancer or therapeutics or digital health, that is much different than, hey, I have an MBA, for example, or I study data science and I'm interested in AI, but maybe I'm not a deep expert. And so I could probably actually be a decent investor. But that's very different than, hey, I had to work in a lab and really understand the deep components of this. So again, there's an incredible amount of nuance. But to me, what I evaluate is the actual expertise or lived experience, not the ultimate degree.
Yeah. And, it's like maybe the person could be really young and they just have done so much in their past that maybe even like someone in their fees haven't. So it's really based on what experience that person actually has. And just like Jonah says, PhDs are really hired because they are specialists of specialists. And masters, maybe if they have a bit of experience, that's good enough to really just invest in the field as a generalist. But then even when they're investing, they really still take like the thoughts, and they really value the thoughts of experts like Jonah and what he's doing. So could you talk about what you're researching right now, what ESG is, what impact investing is for our audience who might not know?
Yeah, of course. I'll save you the 6 hour answer, but at a very high level, so impact investing, as I mentioned earlier, is investing with a dual mandate. So you're trying to make the world a better place by way of creating social or environmental returns, and you're also trying to create financial returns for yourself and your investors. So if you're a VC, you still want to, create returns for your LPs, but you also ultimately are concerned with your end customers. So if you're investing in a particular company, you care about how their products or services of that company impact the end customer in a particular region. So that's really impact investing. So we think about the intentional approaches to create positive impact on the world because you are intentionally choosing to invest in some companies or others in the private markets. Generally, we think about impact investing in the private capital markets. In the public markets, we think about ESG, environmental, social, and governance, though that term might be changing in the future, and we can talk about that, is really thinking about what to avoid and being mindful of how you screen for certain investments when you're building a public markets portfolio. So thinking about publicly traded stocks, maybe you're interested in EV, for example. So you would have Tesla, maybe you'd have Rivian or something like that eventually. So just thinking about how to screen out investments that don't align to your values. So historically, people maybe screened out oil and gas or tobacco companies. And they would prioritize companies that are more positively geared towards creating some benefits for the environment. So that's really ESG. It's really a lens to evaluate investments and evaluate your portfolio. Impact investing is more of a strategy, a proactive strategy for how to actually build your investment scheme and actually a thesis that guides everything you do. Um, I'll put a little asterisk around ESG because, as you might have seen in the news over the last couple of years, there's, and especially with the new administration, there's a little bit of a retreat from ESG. I think it's harder to feel like there's no risks in being really having your foot out there towards ESG and saying, yes, we believe in sustainability. We're really climate forward. And so there's a change in language, honestly, in the space. Some people would use the word, climate transition or transition finance or nature investing. So there's new words to talk about relatively the same things, just being mindful of the positive and negative impacts of your investments. So in my own research, so I helped lead the project on impact investments at HBS, along with Professor Sean Cole and Professor Josh Lerner, who are amazing economists who work at the business school. And we really, write cases for the MBA curriculum, work on several large-scale academic projects related to nature investing, blended finance, politicization of ESG was a note that came out a couple months ago. Really just trying to characterize and understand this world where investors have these, financial goals, but also these non-financial goals. And we want to understand to what extent do they actually achieve those targets.
Yeah, and that's the amazing part because you're really helping people learn, and at the same time you're doing research about it. So it's like you're helping yourself learn, but then the best way to even learn and retain that information is by teaching people, and you're just like spreading this knowledge every single day. Um, I know that people in our audience might not know about what an ESG manager is, and basically, just like Jonah says, it's really just environmental, social, and governance. It's just three big categories, which might change soon because of the administration. But basically, what this role is in a VC fund, you really haven't heard of it because it's just like making sure that the impact of the investments in the VC funds are actually good for the environment, good for our society and good for the generations after us. And this is really important because if your VC fund has investors, these investors are called LPs. If they see that your VC fund has, an ESG aspect to it, they think like, okay, I'm actually like investing in something that will give a good cause. So what happened in like the previous administration is that there was a big push for ESG, and Biden loved it to the point where he actually gave like a bunch of benefits. The government gave like tons of benefits for investment firms and companies that has an ESG aspect to it. So it's like some firms even like branded themselves as like ESG, as in like they put ESG in their names. But right now there has been a retreat. That doesn't mean that the firms are not doing it, because the investors want to see like people that invest in the good for the society. Like they want to see their money go to a good cause. So for our audience, these ESG roles will stay the same. However, their name might kind of change a bit. as Jonah kind of says, I know that VC can be, really tough with long hours and it might not be for everyone. Who is it not for?
Who's VC not for? Um, yeah, it's an interesting way to frame that question because I think so many undergrads and especially MBAs are the people I most engage with. They all want to be VCs, and typically, even of the top business schools like Columbia, Wharton, Haas, Stanford, Harvard, only send like 3 or 4% of their class to VC every year. I think VC is not for people that really want a clean cut 9 to 5. They sit at their desk until 5 o'clock and then clock out. I found that some of the best VCs are really all in on the field, and it's not to say that there's no work-life balance, because I think ultimately you're designing your life to be something really exceptional beyond just I work 9 to 5 and I don't do anything beyond that. I think to be good at VC you do have to do more than that. And so I think, it means that you're the kind of person that is happy to go to a conference late at night, to a webinar while you eat your lunch. You're willing to have 80 coffee chats a week. You're willing to read new books about something you don't understand. You're willing to meet new people all the time. Um, and I think the other side, who is it not for? It's not to say it's not for introverts, because I would consider myself a bit of an introvert, but it's not for people who don't like working with other people. So if you are a self-proclaimed individual contributor at a large tech company and you like writing your code or vibe coding nowadays and don't really like working with other people and you're really happy with that, then I would say stay in that role. That's perfect for you. I think VC is really a people business. People have said that for decades. So if you don't like meeting up with new people, understanding what they're working on, building really strong relationships with founders, LPs, other GPs, it's really not for you because you're going to burn out really fast. But if you get energy from being around people and from learning, then I think it's probably the best sector to work in my opinion.
Yeah, and I fully agree. It's like people don't understand that VC is a lifestyle. It's not like a 9 to 5. If founders call you, you just have to come and help them out, help them put out fires. It sounds like a day in a VC is, pretty tough. And, as a researcher right now, you help around with the HBS fund, you help around with the two professors, and you really just drive this research home. But you're also on the consulting side for VC firms and advising side. What does your day look like, or what does your week look like?
Yeah, I'd say no week is the same. It really depends on different events or commitments around HBS or beyond. But I would say first off, a lot of writing and a lot of reading, reading new academic papers, reading books, trying to really understand what people are thinking about and writing about. We have a lot of great relationships within our own research group at HBS with other amazing schools, so figuring out what they're putting out. But again, mostly writing. So writing a book, writing several cases, uh, you know, advising different students on writing potential memos for their summer internships at different funds they're working at, or maybe they're writing a business case for a startup that they're working on. So really my world lives around writing. But typically something that I like to do is get up around 7 or 8 and try to write for at least an hour or two in the morning before you do anything else, before you take meetings, before you check your emails. Sometimes that gets up to earlier 6 a.m. for really busy seasons. But I think figuring out how you work well. And for me, it's writing early in the morning and then taking meetings later in the day and hunting down emails. I think as well, I don't really believe in a lunch break. I think maybe that comes from my days working at Goldman, but I think you can just kind of take care of your own personal tasks on your lunch break and then get back to work. To me, working on the things I'm interested in is much more exciting than taking an hour strict lunch break. That's my personal view, and others, I think, certainly love to protect that hour in the middle of the day, and I certainly respect that. Um, I think some other things I do throughout the day, I time block. So I'm a firm believer that, at the end of every day, you should time block the next day or the next few days so that within any basically 30-minute or hour block, you know exactly what task you're working on. And after a call that relates to that task, you are writing in notes into that meeting invite. So you know exactly what you're picking up on when you turn the page the next day. Um, and so I think, yeah, being able to prep your time block, and then execute early and then follow on in your schedule and actually take up, emails and meetings the rest of the day actually leads to a fairly productive schedule, I think, with these different commitments. I've seen people at HBS where it's really hard to manage your calendar. Several of these faculty are very well known around the world. And so they're traveling, they're working from airports, and it's just hard to get a lot done by this way. I've seen and learned from some of these best practices that some of these different faculty have used. So that certainly helped me out.
Yeah, And I personally just like never get anything done unless it is in my calendar.
Yeah.
So I literally put like everything possible in my calendar. I prep the day before it. I know that you mentioned you don't actually take lunch, and sometimes I don't do that too. It's just like you just get way too focused in work or study or anything like that. Could you talk about like how transferable was your experience from Goldman, the market research and strategy?
Yeah, I think fairly transferable, at least to the research environment and also to VC. When I was working at the firm, again, I was leading contracted projects around market research. So this could be anything that a VP or MD would want to know. So, for example, in the post-Brexit world, the COO at the time of Goldman in the UK was really interested in taking out some of our bankers that were based in London and shifting them to mainland Europe because it was less expensive to host our investment banking teams there. And there's a tremendous amount of private equity client exposure on the western half of Europe. So if you can relocate basically your IB teams to some of those offices, it makes it easier to travel and connect with people on the PE side. So I and my team worked on a project to basically vet different offices and figure, okay, if we were to move all these bankers from London, what city would it be? It ended up being Munich. And then 2 years later, we created a Munich office. That would be like an example of an end to end project where we said, hey, there's a market issue. Basically, we're paying our bankers too much. It's really expensive to be in London post Brexit. We need to move them somewhere else. And this is a really complicated market research problem because it's not clear how one decision is actually going to create positive business outcomes and protect our precious revenue. And I'll add a caveat here. I think especially for bulge bracket firms, everything is about comparison. It's comparison to the other bankers on your team, the other trading desks at your firm and your peer firms. If you're at GS, it's how is JP Morgan doing this quarter? How is Morgan Stanley doing this quarter? So I think that comparison game makes you work very, very hard because you're very cognizant of what's happening in the market. And so taking that to VC, one, you're constantly learning. You're constantly solving really complex problems. You're also building long-term relationships, not only with founders, but with GPs and LPs, as I said. And so when you're at the bank, you're building relationships with people at different firms, but also at different divisions within the firm, and that really helps you establish a really strong career because you can tap those networks when you need help or when you need answers to the problems that you're trying to solve for your clients. And so that, I think, helped me build not only my professional skills but also just the way that I look at a career, which is really building a network of really strong relationships. And then at GS, or sorry, at HBS, when I was looking for pre-doctoral research roles, I think being at GS was one of the big reasons I was able to land the role because we were looking for people that had some understanding of the financial markets, but still had an academic background. So a lot of the best RAs I know at HBS do have a master's and have worked in finance or consulting for 1 or 2 years. And so they can step back into a research environment, they can read and write, and they actually understand what the real world looks like. And so it's a really strong edge to say, hey, I know how these firms think and work, but I do want to write cases and kind of bring this insight into the MBA classroom or other classrooms around Harvard and beyond. And I think that's one of the best ways to approach the RA role. But that was, I think, how I was able to bring a lot of that experience across to HBS.
Yeah, it sounds like it wasn't just long hours. It wasn't just like skipping lunches as like a norm in Goldman. It was actually like tons and tons of network building and really building relationships, learning how to build it, learning how to maintain it. And also, you're doing like these large scale projects where it's like just like one small thing could affect like so much people. And you never know what the effect could be to the point where you're like, hey, let's just like make sure that we can do all that we can do with the resources that we have. And by, taking all the skills, you really like understood like how to consult investing firms, consult like tons and tons of people, high net worth and also like high level people on how to make high level decisions. So going to the point of consulting and advising, how much time are you like spending on the advising side of Sirac and also consulting in Bright Edge?
Yeah, I think it really depends week on week. My full-time capacity is still HBS, so I think it really depends on the need. So, if there's a Ciroc event late at night, I'll join that Zoom call, or if there's a one-off connection with a founder, happy to do that, or if someone's in Boston, grab coffee, and then I will actually take a lunch break. So it really depends. And on the Bright Edge side, it's really fitting it around HBS to make it work. And thankfully, it's a really flexible role, and so being able to connect with the team as I'm available around HBS has been successful thus far. But I would say it really, really depends week on week.
Yeah, and could you talk about some of the ways that you mentioned how to manage time, because it seems like you really do have like an effective schedule. And our audience, some of them might want to learn from like how the best actually do it. And you've done tons of stuff, you're managing tons of stuff at the same time, you're helping your community. How are you doing all of this at once? Like, what's your way to manage your time?
Yeah, I would say, yeah, I would go back to time blocking, as I mentioned. I think it is an amazing way to protect your time. So protect even your like individual contributor time. So for example, if I know I need to make strides on a book chapter, I'll book off 2 hours, and literally the title of that meeting is, the title of the book, and then kind of the what I need to do is the meeting notes. And it's sort of like a commitment to yourself of what you're going to ultimately deliver. And so you're not, I think it also helps manage stress because day after day, I know, hey, on Wednesday, I'm going to spend an hour working on this one project, and I know how quickly I can work. I can probably finish that within an hour. If I need backup time, I'll extend it 30 minutes or find 30 minutes later in the day. I think sort of waking up and just seeing how the day goes is unfortunately how a lot of people kind of navigate their careers. It's very receptive to who's going to send a meeting my way, who's going to ping me and need this certain thing. I think having the time blocking, but then being flexible as business needs change, or your manager needs something from you, or your peers need help, you can actually move those blocks around. I think the second thing is just how much time you give yourself to actually be excellent at your job. So, are you rolling into work 15 minutes before it starts? Or when I was at the bank, I would get to work an hour or even 2 hours early sometimes if I had calls in Singapore where one of my direct reports was. So, how much time do you actually give yourself to be good at what you're doing? And I think for most people, they're not giving themselves enough time to be excellent. So I found that, especially at GS or maybe other firms, if you're in consulting, for example, the hours are really long, but some of those hours I think are for you to get your bearings and plan ahead for especially big client meetings or pitch events or presentations. So I think time blocking and then giving yourself plenty of time to actually be great are some of the things that I've learned from people who are way smarter, way more successful than I am just over the years.
Yeah, and it sounds like I remember you talked about how you wake up so early, and that's also a way of time blocking to make sure that the time that you want for yourself to do consistently every single day, you have that time. So if Jonah wakes up at like 6 a.m. all the way to like 9 a.m., maybe during that time, he's not working, he doesn't have official work hours. So then those 3 hours, he can just like do whatever he wants and really just like dive deep into different research, hang out, go to events, stuff like that. And then there's like also hours in the workday where it's kind of flexible. That's where you should time block it the day in advance. And maybe something big came up, then you can just switch it around. It's really easy to do so if you know that you are the one who created the schedule. And it really brings some control to your life. It really makes you feel like, so I'm in control, I can do whatever I want, and I'm not really restrained by my own schedule. I'm just gonna time block things and make sure that I can get as much time for myself and as much time for my colleagues as possible. I know that you also talked about this time aspect, that sometimes if you have an event at like 9 p.m. for Serac, then you would just kind of go there. Bonding with VCs and also like networking is one of the best ways for specialists to start a relationship with like a VC fund. And as an advisor, consultant, and researcher, what do you do at events to like make you feel that it is a value add for your time spent there?
Hmm. Yeah, I think the same thing goes for in-person connections at events or, connecting with someone on LinkedIn and then doing a Zoom call. I think first off, I think giving a lot of free value or being generous is another way to put it. So like if a student reaches out to me on LinkedIn, I'm probably going to try to respond, especially if they've gone to Westmont or they're at Harvard or they know someone I know. I think most people like myself want to help other people, especially young people making early decisions in their careers. So especially with VC, make the intro, make the connection over email for different people. I think give a lot and don't expect a lot in return. And generally that leads to strong relationships. Like there's a line someone said, like, if you're a shark, people are going to swim away. Like if you are always looking for equity or looking for compensation to be a venture partner and you're only going to help someone if you get cash incentives or something, people aren't going to want to work with you. And so ultimately some of the best people I've seen in VC is that they're extremely generous with their time, and their time's already very limited. and they're just willing to go out of the way to help you, because eventually through that relationship, which is a long-term thing, you'll want to help them in return. And it really just points to human nature, honestly. So that would probably be my big insight, especially at events. Like, you're not always trying to close a sale or close a roll or get into an investment round. It's really building relationships with people. And then also, second tip, not everything has to happen in one meeting. Sometimes you can have a meeting that is just building the relationship, getting to know people. So like, for example, if you're a GP at a firm, I would say, hey, Joe, just want to understand your thesis better, want to understand what kind of investments you're looking for, want to understand your track record and journey in the sector, and then figure out how we can help one another. Period. That's call one. Call two can be about a deal that maybe I was already interested in that you're working on, and I want to get inside the round. But you don't have to make that sale on the first call. And again, that's human nature, but also just sales tactics, which really VC is sales in a lot of ways, especially when you're fundraising. So that's something I've certainly learned kind of through the years.
Yeah, 100%. And some people don't realize that, but VC is kind of just like a high level of sales, but even longer sales cycles for LPs and maybe shorter sales cycle for founders. But VC, it's like some people just don't understand how difficult it is. But at the same time, it's like if you love it, like Jonah does, if you really, really love the industry, it's really worth spending time there. Let's switch gears for a minute. For all the aspiring VCs listening to this, could you talk about the key reasons you landed each of your VC roles: investor at Global Millennial Capital, advisor at Serac, and impact consultant at Bright Edge, and maybe Harvard's impact fund?
Sure. Yeah, I'll provide some color commentary there at a high level. So I think it comes down to specialism. So like, for the audience, like, what's something that you understand better than anyone else, or at least trying to? So at HBS, some sort of by osmosis and my own intention, I'm around a lot of really great people that are passionate about impact investing. So I get to learn from them. I get to do my own research. Um, so I think for Global Millennial, for example, they were interested in a climate and impact strategy around their Fund One. And so I connected with the GP, who was a Harvard grad. And so being able to actually work together and think about that thesis, source investments in Boston, gave me an edge, not only because of geography, but my specialism. For Ciroc, there was already a connection back to someone at HBS. Again, just kind of as a network expanding force, to be based in Boston, to be around Harvard and MIT, and then ultimately take my research and support their portfolio companies, I think is really why I was approached for the role. And again, just building a relationship with different VCs who I really admire, like Kevin, who's the head of Ciroc, and also supporting firms that have a thesis alignment. So Ciroc is focused on investing in investors from underrepresented backgrounds, specifically in the Midwest, but also around the U.S. So, when that role comes about, if you already hold those values and you already want to support those kinds of organizations, those connections and engagements are really fluid. So there's not a lot of friction saying, right, I love what you're working on. I can definitely support this with my time. And so with Bright Edge as well, it was the specialism around IMM. It was a connection I already had. I had always admired Bright Edge for what they were doing within the impact space, specifically on oncology, but also as a thought leader in developing novel tools and frameworks around impact measurement. So again, taking the research-led approach, looking at a really deep tech, very educated team and saying, hey, I think I can support in this one niche thing, which is IMM. And again, I think the thing that underpins all of these opportunities is really the network. So being based in Cambridge and Boston is a privilege. Getting to meet and work with people at Harvard and MIT is amazing. So for people who are, if you're based in Chicago and you're, know people at University of Chicago or Northwestern, use that network, use your connections back to these universities, to major VC firms. Obviously, if you're based in the Valley or Austin or LA, use your connectivity. I think if you can position yourself to say, I understand this topic or thematic focus better than anyone else, and then start to write about it, start to publish, build your network around that, and then say, I actually know people in this space that can add value to something you're working on. You are then the broker of that value. You're brokering relationships and introductions to new people. And again, it goes back to that generosity thing. You're adding value to these people for free through people you already know. And I think that goodwill takes you very far in VC.
Yeah, and it sounds like the key decisions that you really got these roles was at first you were similar to the people, you were within their network. For the advising roles, it was like you are a Harvard alum, and also they're kind of within the Harvard space. And then for Bright Edge, you were with IMM and you had this connection, you had this network. And, like Jonah says, you really should tap into your network, as in, like, who is similar to you, who lives in the same location as you. Location is a network. If you go to San Francisco, that is an amazing network that you should tap into. And if you go to a school, like Jonah says, literally just like search up the alums, go to maybe like Gemini and ask for a Boolean search of who is the general partners that went to Harvard University or something like that. And then they would give you so much in the Google results. And all you have to do is just paste that link in and then go and search every single person out there. And then just like send a LinkedIn request, send like a DM. And, that's just like the basics of starting a relationship. I know that, obviously you could start a relationship with networking, but Jonah is like a really specialist. So like he actually has tons of value to bring, and he also knows how to maintain relationships. Could you talk about how to maintain your relationships that you've learned from consulting, from your past experiences?
Yeah, on the maintenance piece, I think it's just having consistent touch points. So whether that's an email or a text to check in on what people are working on, if you're in town on a conference, get coffee with those people. I think it's never been easier to maintain global relationships. I was in grad school during COVID. So during that time, I think it forced a lot of people to get online, call people, build, network through Zoom, because there weren't that many conferences at the time. So I think, yeah, just like having regular touch points with people is huge. Finding opportunities to collaborate or support what they're doing. I think even like an email saying like, hey, just wanted to reach back out, understand what you're doing. If they say, hey, I'm working on X, Y, or Z project, and someone who's also working on that project, say I could offer an intro. Maybe there's a way to collaborate or add value in blank way. I think just always knowing like how can I add value to this person so that when you have a gap, for example, I'm looking for that mysterious AI PhD to help with the portfolio company. Maybe I already met that person because I helped them with something else. So again, just giving value, I think, to the ecosystem is really the point.
Yeah, and I completely agree. It's like maintaining a relationship is just like a simple thing of treating the person as your friend. It's like sending the random texts, be like, "Hey, how's it going? I saw that you're in town, but do you want to grab a coffee? Do you want to go to this event with me?" And maybe they'll say no, but that's okay. It's like you are adding value and you're telling them that you value them and that you exist if they want to hang out, if they want to chat. And then when that time actually comes where you guys are both interested in going to the same event, that person's gonna hit you up and be like, "Hey, you might be interested in this. Want to go to an event with me?" And that's really how you build a relationship. Like Jonah says, it could also be just like a simple message where, "Hey, I'm gonna intro you to this person. It seems like you're looking for so and so persona, and hey, I think I can do a value add. Would you like me to intro you to this person?" And if it actually works out, bam! Like being a connector, that's the most amazing thing ever, because it's actually less, as in like you have to do less than like develop that one-on-one relationship. If you connected two people, it's like as long as those two people has formed a great relationship, then you're basically like you can kind of freeload for the rest of your life. And that's the craziest thing. uh, I know that you've done tons and tons of research. Looking ahead, what trends in venture capital are you most excited about? You're researching impact investments, ESG, VC, and sustainable finance. What do you think is being overlooked in the market right now?
Hmm. Yeah, I'll think of a couple things and maybe I'll say excited about, but also concerned by, because I think generally what people actually think about all day and post on LinkedIn is what bothers them. I think the first one is, yeah, I've seen this all over LinkedIn and we've been talking about it for like a year, but the change in venture capital in terms of the holding periods and the valuations of companies that have traditionally signaled exit potential, um, those two things are completely changing. So venture capital is now looking more and more like private equity, where you're holding a portfolio company longer, Maybe you're actually targeting a secondary market sale to a growth equity firm or a later stage firm instead of pointing to an IPO. So I think the value for, say, a Sequoia or an Andreessen who are now, pursuing this path, potentially, registering as an RIA. I think Lightspeed was also a firm that recently announced that they had done this. They're holding their companies longer, so you're riding the wave of their valuation longer and longer. And when you need liquidity, you can sell off some shares. The issue is like you basically are cutting out the retail investor in the public markets who doesn't get to invest in the next Facebook or Meta because it might not go public for a very, very long time, if at all. It's the same way of, an early investor of NVIDIA, for example, maybe companies are just holding that because this is now $1 trillion opportunity. So even post IPO, they're still holding on to their shares. So where traditionally we would hope for an exit between, 7 to 12 years, maybe this is like now 15 years or longer. And so, PE historically has a shorter time frame where they want to get an exit in 3 to 5 years, but the game is completely changing. I think a part of that is AI. Obviously, everyone's been talking about it for a few years. Part of the AI bubble that we're seeing is that you can build companies very, very quickly and find sustainable revenue very, very quickly. But what that means for a company's growth is you're not having to raise venture capital right away because a lot of founders, their primary goal is, I just want to raise VC. They get a term sheet, they can say, I'm a VC-backed founder, tell their grandparents about it, super exciting. How that's changed now is you're building sustainable revenue. Maybe you have less co-founders. And so ultimately, maybe you are thinking more in terms of what's my private equity play than traditional VC getting a term sheet at pre-seed or seed. So that is an entirely different shift in the investor founder dynamic in the market. The second thing, something we've already talked about, was the retreat from ESG and potentially impact investing. I think there's a pro and con here. The con is there's potentially outflows from large asset management or investment firms like, say a BlackRock or State Street or Vanguard, because maybe investors have less of an appetite for ESG. The other side is that the people left in the industry are going to be really, really serious about these strategies. So people like myself, people who are, saying, no, we need to double down on impact investing. These are, I think, something I admire about the impact investing sector is it has a long-term time horizon. So we think about the climate transition as 20 to 30 years and beyond. We're not thinking about a 4-year administration. So I think doubling down on some of these strategies and pushing ahead is really what I'm excited about, and I hope continues for the sector. I think the last thing that is certainly top of mind is the future of work, not only with AI, but other technologies. If you listen to any major VC podcast, they say, yeah, AI will take people's jobs, but there's all these other benefits. It's not that big a deal. I think it is a big deal. I think it is a big deal to think about if you are a blue collar worker or you are doing some task that is repetitive at a keyboard, for example, and AI can do that task in an autonomous and low cost way, especially in more developed markets where historically those tasks have been outsourced. Like take a call center, for example. What are those jobs going to turn into? And what are those employees going to do? So yes, I think AI is this new wave, which we saw with the onset of the internet and then kind of like the app storm where everything had to be an app. And then now this is kind of this third, or even some people call it the fourth wave. I think it's all positive progress, but there are always negative impacts of progress. So I'm thinking about what really will impact people's careers and their opportunities moving forward. I think positive aspects, some people say that, AI is just a tool. It'll make you better at your job. It won't replace you. But in other very real ways, I think some jobs will be replaced. And so how that manifests, I think will be interesting and something that we'll certainly be watching.
And I really like this transparent and in-depth view that you have. Do like all your research, and I've been seeing it on LinkedIn as well, where it's like people are talking about how VC is transitioning into private equity because they're having way too much funds. It's like these large VC funds, they have too much money flow. And it's like, what are they gonna do with it? Just keep it locked up for like 10 years, or just like wait until they can sponsor like another open AI employee that leaves the company and then give them like 2 billion. Like, what are they gonna do? So it's like right now, the biggest funds, smaller funds would kind of stay the same where it's pre-seed, but the bigger funds is really they're gonna change into like RIAs, which is basically like Jonah says, they can invest in actual stocks, they can invest in tons and tons of assets. They're not really locked up anymore with their cash. they can become like secondaries, and that's where this major shift in startups kind of went into, where it's like founders are not really like, obviously, like most founders, they want to go to IPO, but now they're kind of thinking about secondaries, and like they're thinking about like, okay, am I going to get acquired? Am I just going to stay in the private markets? Because these companies, there's like tons and tons of IPOs in 2021, but now it's like it's just decreasing in an exponential slope. So all the companies, the big ones that used to maybe even IPO, but now these companies at the same size, they're really just staying private. It's like the founders, they have to consider the possibility of secondaries, and what better for big VC funds to channel that money into creating like an all-encompassing platform where they're VC and they're also PE. So then they can really just give back money to their investors faster, and these cycles of getting in money, churning out money, and giving back money to investors actually is a main advantage point. But obviously for the smaller VC funds, we're talking like maybe less than 300 million AUM. Those funds, they're kind of gonna stay the same, where it's like they're gonna be focused on pre-seed. They're gonna be helping the founders go from 0 to 1. And I know that Jonah talked about tons and tons of things where it's like AI is going to take jobs, but at the same time, it's going to create jobs. These funds, you know, maybe the larger funds that they get, as in like the more they transition to PE, that's going to create more jobs. But then when you think about it, there's also going to be jobs where if it's way too repetitive, then it's just going to get cut, and that's just a reality of it. And we just got to understand that and make sure that we understand that we can leverage our skills and leverage the future skills that are needed in order to really stay in competition and really have a great career for our future. I know you talked a bit about how to break into VC, and you also posted a guide on LinkedIn for your network. For our ESG specialists or our impact investing specialists who needs an actionable plan to implement right away, what will be your recommended 6-month plan to fully break into VC as an advisor or consultant?
Yeah. Yeah, 6-month plan, which I mean, I'll give some commentary to a 6-month plan, but it might take longer, it might be shorter. I mean, all you need is one job, right? Um, I think as a starting place, it's really understanding the market. So for someone who wants to break into impact investing, Impact Alpha is a regular newsletter and sort of outlet for everything going on in the impact space. They highlight investors, deals. When MBAs at HBS, for example, ask me like, how do I get involved in impact investing? How do I learn? I would say go read Impact Alpha every single day. There's a book called Business of Venture Capital that was also something that was really formative for me. Just understanding what does the VC game look like. So if you're interested in say ESG in the public markets or impact in the private markets, you know what kind of roles to look for. Because to say like I want to be an impact, what does that mean? Like that can mean 30 different things. So I think like month one, try to read everything you can. Like build a deep dive report for yourself by reading Impact Alpha, Business of Venture Capital, read reports coming out of, say, like different research institutions. So Wharton has the ESG initiative. They publish a lot of great articles. You could read some of the papers that have come up out of our research group at HBS, the Project on Impact Investments. Really take a sector view of what's going on, and then you know where you want to drop in. I'd say like month 2 or 3, start to think about kind of roles you could land. So we haven't talked about this yet, but there are so many different roles within venture. So everyone thinks I want to be a VC. That means I'm a VC associate, essentially. There are so many other jobs. So yes, there's the investor track where you're analyst, associate, principal, partner, associate partner, something like that. There's also working as a platform manager. So you are someone who facilitates the value add the firm gives to portfolio companies. Maybe you put on, summits or events or on sites. That's also part of kind of running the platform or running the internal operations of a firm. You could think about kind of first touch points into VC. If you have no prior experience, try to become a VC fellow or a venture partner or an intern, and then specializing in something. So again, like, maybe month like 4, figuring out, okay, what's that role? Maybe it's a venture partner, and then figuring out what am I really good at and what can I provide to the firm. So for me, it was thinking, okay, I really am passionate about the climate space and impact investing. There are some firms that want to get better at this. How can I help those firms do that? Building relationships with those GPs. So If there's someone in your audience who lives in LA, for example, and is really passionate about national security, there's a ton of primes in El Segundo and in LA, and so you can build relationships with people who work at Northrop or work at Raytheon, for example, and say, okay, if there are GPs interested in dual use or national security, I am now a value add because of where I live and who I know and what I can do. And then saying, I want to be a venture partner or fellow because of the free value I can give. And so initially, maybe those roles are not paid, but at least you're in the space building those relationships. And then maybe when an analyst role or a platform role comes around, you can be a part of that. The other role is working in investor relations, which is a very undervalued part of our industry. That's also something, if you're interested in sales and relationship management, that's something else you could pursue. I would say, like, I guess we're on month 4. So month like 5 or 6 is actually getting out there. So you've now done some research, you know what you're looking for, you know who you're looking for and what you can bring them. Start to get out there, attend webinars, events, conferences, and try to build those relationships in a very organic way. And it'll become more obvious as you have those conversations with real investors and hopefully LPs someday, what you need to do kind of as next steps. So like maybe you are interested in climate, but you realize everyone's thinking about decarbonization. That's something you should deep dive on because of those real conversations or panels you listen to at conferences. So that would kind of be my 6-month plan, but it might become a year and a half plan depending on the person and the time of year.
Yeah, and it's really about putting yourself in the right environment and really starting that step. And this is what the 6 month plan is usually for, is our audience, like once you actually do the 6 month plan, you're just gonna feel natural and just like continue doing it. And there's just no way you can't break into venture after you consistently execute again and again and again every single day. On the other side, for people who similar to your earlier journey, going from market research to VC, what would be an actionable 6 month plan for them?
Yeah, I would say it would be similar in that, say, like month 1 through 2, you would actually deep dive on a particular subsector. So like if you're coming out of like equity research, investment banking, market research in some way, figuring out what kind of organization you want to break into and like what subsector is really exciting. So for example, a lot of equity research associates, they'll kind of have a subsector, maybe it's biotech and life sciences, or it's aerospace and defense. If you want to go apply that research to VC, figure out step 1, create a list of VCs who are already doing that. So like J2 Ventures is an excellent dual use firm that invests in, domestic infrastructure, national security, and deep tech. They're based in Boston. So that would be a good example. If you're interested in that space because of your prior market research background, you can apply that at the VC firm. I'd say, after building that list, maybe month 2 is figuring out, okay, what are they excited about? And you can always tell because you look at their portfolio. So I would outline for these firms, who have they already invested into and what can you learn about their portfolio companies to help you kind of understand where the market's headed and what bets people are willing to make. So functionally, any investment an investor makes is a bet that they're making in the market, which is a huge risk. And so all that's public because they want a market that they're super smart, made the right investment. So all of this is public information that you can go look at their portfolio pages and say, okay, blank investor has made 6 climate bets or 4 AI bets. And so I know this is what they're excited about. And maybe they're pivoting and haven't announced that, and that's fine. But generally, that's something that you can jump in on and say, I understand this really well. And I can help you source new investments, diligence current investments, or help you, in some way. So I think taking the month approach, I would say like after month 2, month 3 or 4, get out there and try to meet people or try to actually build something yourself. So write a report, write a thesis that says, here's a view that I have about the market where everyone else is wrong. Maybe it's about aerospace, for example. Like aerospace is overhyped. We actually need to allocate dollars to something else. That would be an example. And then month 5 and 6, go market that to firms. Try to take that expertise to firms that you've already identified, that you understand well through their portfolio, and apply that research and say, I understand this field very, very well. I want to be an intern, a fellow, or something because I'm really passionate about this. I think a lot of VC, honestly, is showing effort and then showing up to add free value to people until that value comes back to you. And it's a hard game because sometimes it feels like, well, I just want a VC role now that pays me a nice big salary with bonus and a carry. And for a lot of people, that's not immediate. It's finding ways to take your value and give it to people for free until that role comes around. That's what I've seen work for many people, whether they're a graduate student in an MBA program or they're doing banking and trying to break into VC on the side. I think that's the best way to go.
And one of the things that Jonah mentioned is that VC is not really a mystery where you can literally go into their website, go into their portfolio, and actually see like, hey, they invested in so and so, and that's in so and so category. Maybe it's climate, maybe it's biotech, and then you look at the ratio of it. Okay, so 80% is climate investing, and I'm like a climate researcher. Then bam, like you should focus on this VC fund where their thesis is actually similar to yours. And obviously it's better. No, it's actually best to just focus on the people who are doing the same things as you. You're leveraging your own experience. You're not leveraging like, hey, what should I just like learn in like the next 6 months? Something new, and then maybe I can become a journalist. That's just like not very effective. And you should really, really approach it in a way where you're just always adding value, like Jonah says, and add value on day one. That's what they want you to do. They don't want to train you. Like honestly, they don't really want to train you.
I would say
But
there's no training in VC. I think if people are being honest, I think like figuring out how to do financial modeling on YouTube or asking a partner to walk you through a model might happen, but I think it's self-discovery, and most VCs would probably agree with that.
yeah, and especially how it's like so much of a people's person type of thing. You have to have that skill right there and then. It's just like maybe the math, obviously the partners could give you some direction, some resources, but if you don't have the basic foundations of knowing how to make relationships, knowing the investor eye, then honestly, maybe VC is not for you. Now for a few rapid fire questions to wrap up. Ready?
Yep.
What is the best book you've read recently?
Recently, I'm still reading it, I guess. I'm reading a couple books. One is Tattoos on the Heart. It's written by Father Greg Boyle. He runs Homeboy Industries in LA. It's a nonprofit that serves formerly incarcerated gang members, and they actually try to sort of rehabilitate these people in society. And then there's an impact fund called Homeboy Capital that actually buys small businesses that can employ these individuals and create opportunities for them to find sustainable, a livable wage and kind of get their footing after being incarcerated. So super interesting book, really inspiring.
It's really inspiring how you're always like thinking of even like reading books. You're just like thinking of, hey, which book would let me help more people and understand people on a deeper level? If you could invest in any startup from the past, which one would it be?
Any startup. Um, yeah, I mean, the easy answer is NVIDIA, I guess, but I'm not going to say that. I think I'm a big fan of LinkedIn, like probably more than most people. I think it is one of the most interesting companies to ever exist by way of democratizing the way that people have advanced through different classes in society over the last like 100 years. So if you think like historically, the way that you can meet someone new, understand more about how they live or do their job, to accelerate your own career, that has not really existed. So historically, you get into Harvard, you meet other really rich, nice people who are very smart, and they kind of help you get into different internships because maybe their uncle is a VP at JP Morgan. Like that's the traditional networking path for a lot of young people. I think LinkedIn really democratizes that because it puts all this information out there that say, okay, this is who I am, where I work, what I do. And you can DM functionally anybody. And a lot of people will get on a call with you. So I love that. I think there's so much value in just creating human connectivity. And I think LinkedIn will be around for a very, very long time. So that would definitely be a company I would invest in.
And LinkedIn, in a way, is actually really early in the brand building stage of founders or even just like any person in general. It's like other social media platform is just so saturated where it's just like so much content is there. But then LinkedIn, like if you make quality video format or even just like a quality personal brand, just do some posts of, hey, I went to a startup and I found these awesome guys. Hey, I just learned some amazing resource. Hey, I talk about some trends in the VC industry. If you just do that, even though you're not like a person in a VC already, oh my gosh, like LinkedIn is so perfect for personal brand building. So
Yeah.
I completely agree.
I think that even like taking that a step further too, like where it's different from like TikTok or Instagram or Facebook, there's I think inherent accountability to LinkedIn because it's a professional networking site. So you do want to put your best foot forward. You do want to appear professional and have your profile up to date because it could create new opportunities, which leads to potentially higher earning and I think a better career. So I think the incentives are incredibly well aligned for LinkedIn. and to really make a positive impact on people's lives.
I honestly just like couldn't see like another platform that is better to really just build your personal brand than LinkedIn. And
Yeah.
wrapping this up, what is your favorite dish to cook?
To cook. Yeah, I lived in Mexico till I was about 7.5 or 8. So any Mexican food, honestly. I really like to make enchiladas with salsa verde, so green salsa on top, cheese, marinate chicken all day in a crock pot, and then chicken inside. Super fun to make. You can make it for like 30 people when you're having big parties. So big fan of enchiladas or basically any Mexican food.
Yeah, and that's also an traditional Aztec dish that
Mhm.
people would know about. So yeah, that's amazing, Jonah. For anyone listening who wants to learn more about you or your research, what's the best place to reach you?
Yeah, I think LinkedIn, honestly, feel free to connect with me, drop a little note. I'm pretty responsive. Be direct about, okay, why are you reaching out? What's a specific question or intro I could provide? Generally pretty happy to connect people to others in my network or, provide insight on a particular topic, whether it's, how to land a job in academia or VC or investment banking, how to get into certain, graduate degree programs, happy to help with all of those things. So yeah, LinkedIn's a great spot.
And I've seen like all your posts, it's just like you have tons and tons of students reaching out to you. And every single time, you're always helping them, you're always providing resources for them to really just do well on their own and succeed in their career. So that's just something that I hugely respect. Out of everyone who are two amazing VCs that you would recommend as future guests to our podcast?
Hmm. Yeah, I could think of a lot. Let me think. Maybe top of my head, just because I've certainly promoted his book for people who are interested in starting a fund. But Kevin Moore from Ciroc wrote a great book. I think really making it digestible, understanding how to start a VC fund. So I think Kevin's a great resource. He's been in the game a long time and certainly really understands what it takes to be successful in venture. I think someone else, at definitely a larger firm, John Healy works at Cathay Innovation. Cathay is a firm based in, I think, SF, but also they have a big presence in Europe. So just understanding how institutional VCs think and work, he's a great resource, especially in thinking about the dual use sector. Certainly someone that I and my friends here at Harvard have pulled from to gain insight. So those would be two people who'd be interested.
Thank you again, and thanks to everyone who's just listening. Comment a question you want to ask Jonah or want to hear from our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share it with someone who's interested in getting into venture. We'll see you next time on Break into VC.